welcome to today's Limitless Agency team call. Just went through a ton of exciting updates. We just had our record application week with all of our top carriers, which means once this week comes out with issue pay, it'll be the biggest week, not only in FFL company history, but also our agency's history. And we are on track for our biggest month ever. So you guys are killing it. Just went through some new updates. We have a new cruise. Julius, I know you love those. You qualified for the first one. This summer, it's going to be out in the Caribbeans. And then our number one carrier, Americo, just launched a new index universal life, this simplified issue that basically means clients get approved on the spot. We get paid quick. They're protected even quicker. So today we have the honor of having Mr. Julius Gilger on the team call. He's going to educate us on Americo's new IUL. He's going to talk about when to use it, underwriting with it, who to write it with, and then also he's going to show us an illustration kind of how to do it. So Julius, thanks for getting on. Julius is a multiple time Hall of Fame producer, which means he's produced over $400,000 in simplified issue life insurance premium for 2 years and going on his third and counting while building a massive organization. So Julius, we appreciate you. Thanks for getting on.
Thanks for having me on, Hayden. And I'm excited, man. It's been a little while since we've gotten on a call together. So we got some exciting news. So, I think Hayden, and I know you can attest to this, part of an agent's journey in being a good producer is also being a good underwriter and knowing when certain products fit certain clients and their needs, right? And so today it's exciting to talk about this new product that Americo has because there is a niche specific for this product. Okay. For everyone out there, you guys know IULs are huge right now in the industry for multiple reasons. And we'll get into the benefits that it gives clients, but we're also going to talk about how and when to use this plan specifically. Not all plans are one size fits all. You don't want to, this is not a plan that you're going to use for every IUL client, right? I want to stress that too, right? Because at the end of the day, there are different plans and different configurations of how you set up the plan to make sure it's ideal for your client. So we'll talk about that too. But what's most exciting about this, Hayden, is the fact that it's a simplified issued plan.
Yes.
The fact that I can put in an app right now and I can get a client approved on the spot for an IUL and boom, they're covered. We get paid within a few days. And that speed is the key here, right? And so with this plan, you're going to be able to have more business in place. You're going to be able to protect people a lot quicker. Where the traditional IULs, as we all know, they have to go through an underwriting process. Sometimes they're going to require an APS statement. If you guys don't know what that is, that's an attending physician statement, right? So they got to send a nurse to the doctor. All that stuff takes time, right? And those, again, all serve a purpose when you're dealing with those clients. But this specific product where I found the niche for this and how I'm using it, Hayden, is using it more from a protection standpoint, kind of like we do with equity protection when we're talking mortgage protection, right? So when we have a client that's a little bit healthier, maybe they can qualify for a term, but the term just doesn't make sense, and they want permanent coverage, you can pivot to this, right? Maybe you're looking at traditionally a whole life plan for a client for protection, but they're healthier and they want more coverage than you can get them through a traditional whole life plan like 50,000. Now this is where it makes sense, right? So you're using this plan, Hayden, primarily for protection purposes with the benefit of cash value, not for the sole benefit of cash value and then having the cash, the protection. Does that make sense?
Yeah, 100%.
So that's kind of how we're going to use this, right? So let's kind of talk through some benefits. So number one, this is permanent protection, right? So when we get into an illustration, guys, you're going to see that this plan is going to be in place till your client passes away. Right now, there's some values that are guaranteed because of how IULs work, and we'll talk about that. But this plan is designed for the client to have permanent protection, even above and beyond what's guaranteed on there. So that's number one, it's permanent protection. And when you're walking through your client with this, most of us are virtual now, guys. So when you're walking your client through this, have them write it down. I do this every time. Hey, Mary, you got a pen and paper? Okay, grab that. And I'm gonna have you write these things down so you understand what you're getting. Number one, it's permanent protection. Number two, go ahead and write down cash value. And now with this, the way I've sold it, Hayden, is I don't go into the weeds with this one, right? In terms of how much cash value, uh, how it's uh, how it's going to illustrate, because I'm typically pitching this plan for protection with cash value, not selling them on the cash value purposes of, like, you know, infinite banking, tax-free growth. We're not using that for this. We're using it for protection with cash value. So I'm not getting into the weeds, you guys. I'm just telling them, hey, you're going to put money into your plan every month. With your monthly premium, you're going to have a cash account that's going to grow. Okay. There's going to be compounding interest, and you're going to average between 6 and 9% year over year in this plan. And then when you're in this plan 15, 20 years down the road, Mary, if you need some money, you can dip your hand into this pot of cash. You can pull it out, and you can pull it out tax free. So I keep it very simple without getting into the weeds. That's how you want to explain that. So they just are like, oh, okay, great. When can I get in that? About 15, 20 years down the road, you'll have access to it. And then I always tell them, hey, this is for an emergency. Don't pull money out of this just to pull money out, right? This is last resort, is when you want to use this money, right? So we're training, conditioning them to know that this is primarily for insurance and protection, but you're going to have cash value down the road. And then the great thing about this IUL, guys, is it has full living benefits, the exact same living benefits as the Americo term products. So we're talking chronic, critical, terminal, all three of them. Okay. So this is better than selling an Eagle if you can get them approved, because Eagle doesn't have all those. The IUL does, right? So they're going to get the full living benefits with this plan as well. So from a benefit standpoint, that's what we want to make sure our clients are aware of. It's permanent, it's going to build cash value, and it's got living benefits. All right. So now when we talk about underwriting, we kind of touched on this, Hayden. It's literally the same as term.
Yep.
It's exact. If you were going to pitch, or you're going to look at the underwriting for an Americo term plan, you can literally consider them for an Americo IUL. So it's not something new that you guys have to learn. Everybody on this call's probably sold at least one term plan at this point. If you've done it with them, you can use that same exact guidelines for this. Okay. A few other things you guys want to know: when can someone apply in terms of their age, and how much can they apply for? Right. You want to know the limits.
Yep.
So the ages are there's kind of two categories here. So for people 18 to 65, okay, there's a 50K minimum. Excuse me, 18 to 64. There's a 50K minimum, and then it goes all the way up to 450,000. So kind of the same limit like the term does.
Yep.
And then for clients 65 plus, so 65 to 75, it's a minimum of 25,000 with a $450,000 max.
That's
okay.
huge.
So that's great.
Yeah. One thing, guys, that's a big deal, because if you look at, some of the other ones we sell that are, simplified issue, but not always instant approval or a decline, like a Mutual of Omaha or one of those ones, typically, once we start getting up in age to like 60, 65, 70, a lot of them only allow us to do like 100, 150,000, maybe 200,000. The death benefit of 450 for a 75 or 70-year-old is huge. And something that we used to do back in the day, Julius, is if you remember that GUL product, the Guaranteed Universal Life, which is actually pretty similar to this, it's very death benefit focused. If someone was healthy and they wanted final expense and they were 60, 65, 70, 75, and they wanted a higher amount, maybe like 100,000 or 75,000. Well, if they're healthy, this is a fantastic product, and it's going to be cheaper in most cases than that whole life final expense. But like Julia said, you get the living benefits, you get cash value, and it's a permanent death benefit. So just wanted to add that in there.
Yeah, it's always going to be cheaper than the whole life coverage wise for compared to the dollar. So, yeah, that's spot on. Now, obviously, when you're selling these plans, guys, when you're selling this plan specifically in IUL, you guys should know how the cash value works, because whether you sell this plan, whether you sell any other carriers, the IUL in terms of how it's going to earn interest is going to work the same way. Okay. And we'll kind of talk through that real quick. That way, if you have a question, you know how to explain it to your client, because you guys all know there's clients out there that, well, how does that work? How am I going to earn interest? Am I going to lose money in this, Hayden? Like, I don't want to lose money, right? So you want to at least be able to communicate how this works in theory and in principle, so they know how it works and it makes sense for them. So super simple. Mary, there's two buckets of money when you're putting your money into an IUL. Part of it goes into insurance. Part of your bucket goes into your cash value. Now, your cash value account, that's going to be tied to an index. Okay. In this case, the index is the S&P 500. If you're not familiar with what that is, Mary, that's an index that's made up of the top 500 companies that dictates how well our economy is doing. So if the economy is doing well, the index is going up. If the economy is going bad, the index goes down, right? Now, the great thing about this is you're going to earn money, you're going to earn interest when the market goes up, when the index goes up. And generally speaking, you'll see about 6 to 9% returns year over year. That's kind of a safe number. And the great part about it is you're going to make money when the market goes up, but you have a 0% floor. So when the market goes down, you don't lose any money, Mary. Does that make sense? Yes. That's it. That's all you really need to do in terms of explaining it in this specific example for this specific product. Now, obviously, when you're going to have more elaborate IULs that you're going to sell with other carriers, there's layers to that. There's more details you want to go into it. But when we're focused on using an IUL for protection as the priority and cash value as the secondary benefit, you don't need to go into as much detail. You keep it very simple, and we're sticking to what we're doing. We're getting people insurance as the primary benefit and the cash value as the secondary. And then the last thing I want to talk about is fees, right? You're always going to have clients that are going to say, well, are there fees in it?
Yep.
Yeah, there are, right? Just like anything else, but Mary, the fees are already built into this, so you're not paying anything additional. And a lot of times when we're talking about protection and using an IUL for a death benefit, like for an equity protection on mortgage protection, or if they're just needing some life insurance, whatever, they're not really getting into the weeds on fees. They're just looking at how much is the premium, how much coverage am I getting? And then every now and then they may ask, well, about how much cash will I have 20 years down the road? That's very rare, but it does happen from time to time. And so you want to at least know how to run an illustration, and we can get into that to show you guys how to do that.
Yeah, let's do it. And typically with those fees, Julius, even same thing kind of with like annuities with like the PE plus, it's like, it's a 0.95, 1%, somewhere around there. Anyone that has a 401k and IRA, heck, even a brokerage account, you're paying a fee of some sort that's either close to that or above that typically.
Yep. So can I share my screen on here?
Is it letting you?
I think so. Yeah.
Okay.
Let's see. You guys should be able to see my screen.
Yep.
All right. So super simple. Now, guys, the illustration is in the app. Okay. So you got to know that, right? So you can't just go to the quote tool and do this, right? You have to actually log in to the Texty app. That's how you get to the illustration. That's also how you get to the app. The great thing about this product also, you guys, is no matter what state you're selling in, you're not going to have to get the form signed after. There's some states that require you to get the illustration signed. That just can be a hassle. This one's already built in. Once you do the illustration, it's all done. So it's a one-stop shop, makes it super simple. So we're gonna look at a 50-year-old person, just for this example, Hayden, and we're gonna go over here and click this calculator button. And so we got the age of 50. We're gonna deal with, we'll just say male, non-tobacco user. And then here, it's how much face value do we want, right? So we can do it either by face amount, or we can do it by how much does the client want to pay, right? Typically, when we're doing coverage, when we're building an IUL for death benefit for insurance purposes, we're more focused on the coverage than the premium. So generally, the ones that I've sold already, I'm just focused on how much coverage can I get them and giving them a few options. So for this person, we'll just say we'll look at the max, right? Let's just look at 450,000. Okay. Okay, so 450,000, you scroll down here. Now there's really only two indexes with this plan. So the index is the point-to-point S&P with a participation rate. You can diversify it and do point-to-point with a cap. I would just leave it with where it's at right now. There's if I remember correctly, I saw in the training, the point-to-point with participation was producing right around 8%, if I'm not mistaken. I'll have to look at that, but that was the higher of the two out of the participation in the cap. So nothing that you need to change there, but if you do 450,000, the premium on this is 533.58. Okay. Now, two things to note. One, this is a level death benefit. Okay. So the death benefit's going to stay the same. There is not an option in this illustration tool right now, guys, to change the death benefit option. You can't switch it from level to increasing. You can't build it to maximize cash value and minimize death benefit. This is not a feature in this plan as of right now, which is why we're using this primarily for protection rather than for cash value as the priority. Now, you will have the option, though, that after year one, if the client wants to switch from from level death benefit to increasing, you can call Americo and switch it. But if you're building this primarily for protection, I wouldn't even worry about it. I would just leave it as level and keep it moving. Okay.
Yeah.
All right. So
one thing, Julius, I've spoken to Americo about this. They wanted to get this thing rolled out in our hands and start getting feedback. So they've already gotten a bunch of feedback from the field, and in the next couple of months, right now it's pretty much just easy solve. In the next 2-3 months, they're gonna have a lot more in-depth illustration where you can change index strategies, you can do level increasing, and basically see those projections just like you would with our other IUL carriers.
Perfect. So when that happens, then we can always revisit this training, and obviously, hey, now you can use this for cash value accumulation and re-illustrate at that point. But at this point, we're kind of focused here, right? Okay, cool. So that's good to know. That's exciting, actually, because then we'll be able to do more with this, right? So that's really good news. So now a few things I want to note here. Now it says guaranteed till year 27. I'm going to show you guys what that looks like. All right, let's create a report. So if you want to see the illustration, hit create report, hit open report. Are you still able to see?
Yep, yeah, sure.
My screen? Okay. So your illustration pops up. And this is where you get to see all the values, right? So you got a 450,000 death benefit. As you can see, the option is death benefit is level. We have the premium, we have the riders, we have the index strategy. Basic stuff there. On the ones that I've sold so far, I mean, I know it's only been a few days. I've sold a few. I haven't even went through this because I literally treat it like I do all my other mortgage protection appointments. Or my insurance appointments. I'm talking about protection. I'm not talking about cash value to them. So it's really not me going into the illustrations, but I do want to show everyone where to go here. So you can go through all these definitions, guys. We're not going to spend time doing that today. Hope that's all right, Hayden.
Yep.
What I want to really focus on is where the numbers are. Okay. So a few things that you guys can see here. You can see the illustrated rates that they're showing. Okay. So this is the current maximum illustration rate that they're going to show. This is the minimum 6.8, and then the maximum is 9.53. This is over a 25-year period, you guys, of how the S&P 500 index is actually performed. And you can see the actual performance down here. Okay. So this is the one that we have the client plugged into, the one with the participation rate, not the cap. The cap is 10% on this, by the way. So down here is where you can see, yeah. So here's some of the numeric values. There's going to be more down below, but here the reason it said the death benefits guaranteed till 27 is because they're assuming a 0% interest. Guys, I don't know a time, and I don't ever see a time of us not having any interest, because that means our economy is literally blowing up. Like our world is coming to an end, right? So I don't ever see that happening. No one ever believes it, but legally they have to do that. So just understand that and explain it to your clients if you do get into this. So here's the midpoint illustration. So even if they only earn 4.21%, this thing will have enough coverage through through 70 is what it shows on here, but it'll be till the end of their life. And then assuming they can get up to 8.42%, if they get that, their cash value will be almost double, which is pretty awesome.
Yep.
Okay. So here's another, this is kind of the breakdown, you guys. This is the guaranteed values year over year, assuming 0% interest. Again, more than likely that'll never happen. I don't see that happening. And then here's the alternative scales, right? So I always like to, kind of be conservative, Hayden. So I always say, hey, you're going to be between 6 and 9%. No one really knows where you're going to be. So, worst case scenario, you're going to be somewhere in here. Best case scenario, you'll be here, maybe a little bit higher, right? So you don't want to give exacts, you guys, anytime you're talking about an IUL, because no one can predict the future. It doesn't matter what carrier you're talking about. This is where you use a concept called hedging, where you say it should be, it could be, without giving certainty. This is an area where you don't want to provide certainty because we don't know what the markets are going to actually do. And as you can see, cash value goes significantly further when the illustrated rate is higher.
Yep.
Okay. But that's how you run an illustration, you guys. We can take some questions on the illustration. I don't think we need to go through all of this. That's pretty. Oh, two things to note. Obviously, this is the target premium that it has here, the monthly target. So this one actually comes in a little bit lower in terms of what the monthly premium is, but it's their easy solve. They always said the target's going to end up being higher, which is pretty cool for us. But the guideline level premium is important because obviously that's the max that a client can put in a given year, right?
So
So that
let's unpack that, Julius. And guys, if you have any questions, if you want to just put it in the chat box or the question box, we'll get to them. But basically, the illustration you did was $500 a month, so 6,000 a year, correct? If we're looking
yeah.
at the guideline, we can actually double that, and that's going to make it so it doesn't turn into a mech. So that's basically the government's limit of what you can put. I didn't know this thing had a single premium and a 7-pay, which is pretty cool.
Yeah. Yeah, this is pretty neat.
So
Yeah, so
go ahead.
go ahead.
I was just going to say what the 7-pay means, guys, is if you want to only pay for 7 years, you can do that, which is a pretty cool option. And then if you really want to pay this thing up front, you can pay it up front in one single premium. So
Yeah, so the 7-pay is $35K per year for 7 years, or one-time lump sum of $179, right? And then here to kind of unpack what you were saying, if someone wanted to max fund this IUL, not only will they do the monthly premium that we have in there, but they can do up to 12 grand, a little over 12 grand for the entire year. So they would just put more cash into this policy to build up their cash value. So, and then assuming all's good and you've sold it, oops, I didn't mean to stop sharing. Let me open that back up. Hang on one second. So then all you do is you just hop back over here and just hit start e-app, and boom, you're in the app and you're good.
awesome. So guys, I know I did the same thing. Actually, it was in your office the other day, Julius. If it's your first time doing one of these, make sure you remember, if you go to quote tools and try to go through Americo and find everything in there, you're not going to find the IUL. So you have to actually go into Americo.com, go into your agent tools, and then basically do it just like Julius did. So
Yeah. And then guys, if you're, one of the things I've realized just in the last week is when I'm comparing this to the MU IULE, which is also kind of, if you just do it at easy solve, it's also kind of built a similar way. This one comes in a little bit less expensive than MU, and I've had a few cases that were stuck in underwriting, and I ran it with Americo, boom, approved on the spot, and then clients happy, they're not waiting, and we're good to go. Everyone's happy. I'm paid and clients protected.
yeah. Someone asked in here, Julius, if the client doesn't pay the target, will it lapse?
No, because it's designed for them to pay that monthly premium that's in there, and then the interest that it's going to earn over the top is what's going to keep the cash value rolling.
Got it. Okay, cool. Anyone else have any other questions?
No questions, but hey, you sell these, you get $500 on top for selling your first five, right? So it's A, good for the customer, B, good for you, and then C, you're making a little extra money, and then counts towards you first bonus, and then on top of that, we issue these and we go on a cruise. Life's good.
Life is very good. Well, hey, Julius, thanks for doing this. We're gonna put this on YouTube so you guys can re-watch it. And what's pretty dang cool is we pretty much have our bases covered now with anything index universal life. With our agency and our business, we have anything from immediate approval, death benefit focus to kind of the hybrid where it's a combination of both, maybe take a day or two or three. And then we have the huge cases that are, fully underwritten. They're going to take a month or two, or at least a few weeks. So super excited about that. This is the way. We just had our best IUL week. And this year with IULs and annuities, we are ready to really supercharge our numbers. So Julius, thanks again. And we will see you guys here soon.